What's up everyone, and welcome back to Explain the Charts. Today is November 6th, 2025, and we're taking a deep dive into Litecoin, or LTCUSD. There has been a ton of news and volatility recently, primarily centered around the launch of the Canary Capital Litecoin Spot ETF, so we'll cover that, and then jump straight into the charts. The big story was the ETF going live around October 28th, which sparked a lot of bullish sentiment and a rally that pushed LTC back over the $100 mark. However, it seems we saw a classic buy the rumor, sell the news event, as the price was rejected shortly after. Despite the volatility and an initial pullback, the news flow remains largely optimistic, with many analysts drawing parallels between Litecoin's current chart structure and Zcash's explosive 685% breakout from a similar long-term pattern. Price predictions are flying around, with short-term targets cited near $135 to $140, which coincides with a multi-year resistance trendline. Some analysts are even calling for targets of $171, $205, or higher if a true breakout occurs. Currently, the price has found some stability after a rough week that saw an 11% slide, with reports highlighting the $85 level as a critical pivot point for bulls. Let's switch to the daily chart and see how this all translates into the price action. Looking at the daily chart for the past year, we can see the broader story unfold. After a period of consolidation, Litecoin had a massive rally starting in early November 2024, running from the mid-$60s all the way up to a peak of nearly $147 in early December. This peak lines up perfectly with that key $140 resistance zone the analysts are watching. Following that high, we saw a very sharp correction, with a massive drop on December 9th of nearly 18% in a single day. The price then bled out over the next few months, finding a bottom through a series of volatile drops in February and March of 2025, establishing a strong support zone in the low $80s. After another significant drop in April that took us down to the high $60s, the price recovered and has spent much of the last 6 months trading in a range, largely between $80 and $100. This brings us to the most recent action surrounding the ETF news in late October. Let's zoom in on that period specifically to see how the market reacted. Here on this focused view of the daily chart since October 1st, you can see the anticipation building. We had a strong run-up from around $92 to a high of over $106 on October 28th, the day the ETF news was circulating. But notice that long upper wick on the candle for the 28th. The price opened at $99, shot up to nearly $107, but closed all the way down at $96. This was the first major sign of a sell the news reaction. That weakness was confirmed over the next week, culminating in a dramatic sell-off on November 3rd, where the price dropped over 12% to a low of $85.42. The following day, November 4th, saw even more downside, wicking all the way down to $79.68. But this is where things get interesting for the bulls. Despite that sharp dip, the price closed back up at $85.20, and yesterday, November 5th, we saw a strong bullish engulfing candle with a nearly 5% gain, closing at $89.41. This price action strongly confirms that the $85 area is a key support level that buyers are defending aggressively. Now, let's switch to a lower time frame to see the structure of this recent bounce. On the 1-hour chart, looking at the past few days, the picture becomes clearer. You can see the capitulation on November 3rd, followed by a period of consolidation and base building around that crucial $85 support level throughout November 4th. Then, early on November 5th, the buying pressure started to build, leading to a strong impulsive move upward that broke through several minor resistance levels. The price pushed from a low around $82 all the way to a high just shy of $90. Currently, the immediate resistance to watch is that recent high around the $90 mark. A break and hold above this level would be a strong continuation signal. On the downside, the previous consolidation zone around $87 to $88 should now act as initial support. Any pullback that holds this level would maintain the bullish structure on this time frame. Let's drill down even further to the 15-minute chart for the most immediate price action. Looking at the 15-minute chart for the last day, we can see the price action in detail. After the strong push to the $89.99 high yesterday, Litecoin has entered a period of consolidation, trading mostly sideways. This could be interpreted as a healthy pause, potentially forming a bull flag or pennant before another leg up. For intraday traders, the micro range is clear. The immediate resistance is the high at $89.99. The support for this consolidation range is around $88.50. A breakout above the range high could quickly target the $91 to $92 resistance zone we identified earlier. Conversely, a break below $88.50 would suggest a deeper pullback, with the next support area around $87. Watching the volume during these moves will be critical. A breakout on high volume is a much stronger signal. Alright, let's zoom back out to the daily chart and recap everything. The key levels to watch are straightforward. Our most critical support is the $85 level, which recently held firm, with a secondary floor at the $79 to $81 zone. Immediate resistance is the local high around $90 to $92. Above that, the psychological $100 to $105 area is the next major hurdle. The ultimate bullish target remains the multi-year resistance trendline between $135 and $140. So, what are the likely scenarios? The bullish case, which I'd give about a 60% probability, is that the successful defense of $85 marks a local bottom. If we can decisively break above $92, a retest of $100 seems very likely, especially if the broader market remains strong. A sustained break above $105 would reinforce the larger bullish narrative and put the $135 to $140 target in play. The bearish scenario, with about a 40% probability, would be triggered by a firm rejection from this $90 to $92 area, followed by a break and close below the critical $85 support. This would invalidate the recent bounce and likely lead to a test of the $79 support zone. Keep an eye on trading volume on any breakout or breakdown, as this will help confirm the move's conviction. As always, this is not financial advice and is for educational purposes only. You should always do your own research before making any investment decisions. Thanks for watching Explain the Charts. Don't forget to like and subscribe, and we'll see you in the next one.